Hello and welcome back to the channel, where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today we're putting a specific micro-cap company under the microscope, TC. We'll break down why it landed on our hard-to-borrow screener and what the unique data points tell us. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk about TC. This is a micro-cap company whose specific sector isn't the primary focus here, but rather its extremely unusual borrow dynamics. Now, before we get into the nitty-gritty of why it's hard to borrow, let's look at its recent price action and volume, because this is where things get truly interesting with TC. Over the last 5 trading days, TC has seen exactly plus 0.0% change. Looking back even further, over the last 30 days, it's also showing a plus 0.0% change, and today, it closed with plus 0.0%. When we check the volume, it's equally striking. Today's volume was 0 shares, with the 30-day average volume also at 0 shares. This translates to a relative volume of 0x average. Keep these numbers in mind as we discuss the mechanics of a potential squeeze. What is cost to borrow and why it matters? So, what exactly does hard to borrow mean, and why should you care? When a stock is hard to borrow, it simply means there's a very limited supply of its shares available for short sellers to borrow from brokers. To borrow shares, short sellers pay a fee, known as the cost to borrow, or CTB. This fee is typically expressed as an annualized percentage. For TC, this fee is an astonishing 921.4% annualized. Yes, you heard that right, over 900%. Highlight CTB. This isn't like a traditional loan interest rate that maxes out around 20% or 30%. CTB can skyrocket because it reflects the real-time supply and demand for borrowing shares. A high CTB indicates intense demand to short a stock, a critically low supply of shares, or both. For short sellers, paying such a high fee eats into their potential profits, making the bet much riskier with each passing day. Why this stock is hard to borrow right now? TC appeared on our hard-to-borrow screener for some very specific reasons. First, that eye-popping 921.4% annualized cost to borrow fee. But it's not just high, the CTB momentum is also significant, jumping plus 75 percentage points just over the last 5 trading days. This signals that the scarcity is increasing rapidly. Adding to that, the number of shares currently available to borrow is incredibly low, just 2,000 shares. To put that in perspective, TC has an estimated float of 32.2 million shares. A mere 2,000 shares available at 32.2 million is an extremely tight supply. Our internal composite squeeze score, which combines factors like CTB level and momentum, borrow supply, float size, volume/price momentum, and technical setup, gives TC a score of 41.1 out of 100. This score indicates a potentially interesting setup on the borrow side, despite the current lack of market activity. Squeeze mechanics explained. Now, let's connect the dots to a short squeeze. A short squeeze begins when a heavily shorted stock starts to move upwards, contrary to short sellers' expectations. As the price rises, short sellers begin to lose money on their positions. When the cost to borrow is also astronomically high, like TC 921.4%, these day fees rapidly compound their losses. To stop the bleeding, short sellers are often forced to cover their positions by buying back the shares they initially sold. If many short sellers try to cover simultaneously, and there are very few shares available, as is the case with TC 2,000 borrowable shares, it can trigger a frantic bidding war. This creates a powerful surge in buying pressure that can squeeze the price dramatically higher. However, it's crucial to remember our earlier data. TC currently has 0 shares of volume and 0% price change. A squeeze requires active trading and buying pressure to fuel any price movement, which is currently absent. Dilution risk check. Before getting too excited about a high CTB, we always perform a dilution risk check. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding. This can significantly offset or even negate a short squeeze, as it adds more supply to the market, making it harder for the price to rise due to scarcity. For TC, we've found no recent dilutive SEC filings such as -1s, -3s, or 424 BS in the last 90 days. Furthermore, there have been no recent reverse splits found for TC in our look-back window. This is a positive sign for any potential squeeze thesis, as it means new shares aren't actively being injected into the market to dilute existing holders or provide an easy out for short sellers. Just a quick reminder, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what does this all mean for TC? A high cost to borrow and extremely limited borrowable shares do not automatically guarantee a short squeeze. Sometimes, it simply means that short sellers have incredibly strong conviction in their bearish thesis and are willing to pay sky-high fees to stay short, believing the stock will eventually collapse. For TC specifically, the complete lack of trading volume and flat price action is a major factor to consider. For TC to potentially evolve into a true squeeze candidate, we would need to see a significant increase in trading volume, sustained buying interest, and upward price momentum. Without actual trading activity, the theoretical squeeze mechanics, however compelling the CTB numbers might be, simply cannot materialize. Keep an eye on any potential news or catalyst that could suddenly bring volume back to TC. In summary, TC presents a unique and fascinating case study, a microcap stock with an astounding 921.4% annualized cost to borrow and only 2,000 shares available to borrow, yet currently exhibiting zero trading volume and no price movement. This highlights the critical distinction between the potential for squeeze based on borrow mechanics and the actual conditions required for one to play out in the market. It's a powerful reminder that while high CTB can be a red flag for short sellers and an indicator of scarcity, it's just one piece of a complex puzzle. Always look at the full picture. If you found this breakdown insightful, please hit the like button, subscribe for more deep dives into hard to borrow stocks, and let us know your questions in the comments below. We love hearing from you.